Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this video on the Fibonacci retracement tool versus the value range tool, something I use and describe and trade as the value range tool, right? Now, I'm going to, before we get started, I'm going to assume that you know a bit about Fibonacci retracement, and also I'm going to assume that you've watched my introduction to supply and demand zones, right? And if you haven't, there's a link in the description box below and probably up top on the right hand side, right? Because there's going to be certain things I'm going to be going through in this, and like I said, I'm going to assume that you know and understand how I trade with supply and demand and where the strongest areas of supply and demand are, so that I'm not necessarily having to keep going over it in this video. But there are really, there's many ways to look at the market, right? And one of the popular ways is Fibonacci retracement. Now, with Fibonacci retracement, pretty much what you're looking for is a pullback, right? So let's do a bar replay, right? Let's say, for example, yeah, right. So one of the first rules of Fibonacci, right, Fibonacci retracements, are that you're looking for a swing low to a swing high and then waiting for a pullback. So for example, if we're on the daily chart, the euro dollar, right, what you'd be looking for is a swing, right? So Fibonacci retracement, right, and you're looking for a pullback of some description to a level either 23.6, 38.2, 61.8, 78.6. Those are like the main Fibonacci levels that traders will be looking for a pullback to, right, before attempting to get long. Now, one of the issues and problems with with Fibonacci retracement levels is that traders really don't know which level this is going to trade off of, right? This is going to react off of and potentially go to the upside. Well, it's just probabilities, right? And so traders will literally look for price to come down, hit this level, right, at some point, maybe on the lower time frame, right? Let's go to maybe like a 1 hour chart. And right, so this was our swing high to our swing low, right? And then they will look for the 38.2% level, and then look to buy off of that level, right? But what really is Fibonacci, before we get into whether, well, my opinion on Fibonacci, but what my thoughts on Fibonacci really are that you're really just buying at a discount, right? It's not some magical number, even though yes, we get certain ratios throughout nature and things like that, mathematical sequences and ratios between, I think it's like the elbow and the forearm, or between the the eyes and stuff like that. For me, Fibonacci is just discounts, right? You're buying a 23.6% discount, a 38.2% discount, 61.8% discount, and 78.6% discount. And why is that? And it's really because, and as I explained in the introduction to supply and demand video, is that a low to a high, right, is really where you got the strongest area of demand is at the low, and the high is where basically buyers are seeming or deeming this as an expensive level, so therefore they're not going to push the prices higher. So if prices are contained between this low and this high, this is seen as the cheapest area, and this is seen as an expensive area, right? And all you're looking for is just pullbacks, right, within this low to the high, which is the reason why Fibonacci traders will look for swing lows to swing highs. But a lot of, well, in fact, every trading educator that I have seen online over the years doesn't explain this. They just say, okay, they repeat and just say, you know, it's a swing low to swing high. That's what you need to do and look for a pullback, right? But it's the reason why is because psychological reason why is simply because the low is where you've got the most demand, right? And really it's the cheapest area, right? And the reason why it's cheap, well, it's proven to be cheap because otherwise buyers wouldn't be buying and pushing prices higher. But anyway, so like I said, Fibonacci is a you know, traders will look for, you know, areas first of all, and magical so-called magical levels of Fibonacci, and look to buy, and that's how they kind of see Fibonacci 38.2, but you're buying at a 38.2% discount. Is that the best area you should be buying in? Potentially yes, potentially no, right? And this video isn't necessarily trying to disprove Fibonacci, right? Because you're always going to have prices reacting off of a level, off of a Fibonacci level at some point, right? But I'm trying to show you how traders trade Fibonacci, right? And how complex it can get compared to the way that I trade with value ranges, right? So again, one of the difficulties with Fibonacci is understanding which level you're going to necessarily want to trade at, right? Now, and also which swing point, right? Because you could take this swing point, this low to this high, right? And you can also take this low to this high, right? You can continually take in, you know, lows to highs, etc., right? But generally traders will take maybe 2, potentially 3, right? And they will look for levels of confluence within that, within those levels. So you can see immediately, yeah, that the 2 most popular Fibonacci levels are the 61.8 and the 38.2, right? So you've got a level here, right, where traders will look for some sort of confluence, because you've got traders that would be trading this low to this high Fibonacci, and you have, you know, traders, if you go, let me do a bar replay, one sec, right, and you will have traders who would be looking at probably this low to this high, right? So from this low to this high, and they'll put their Fibonacci there, this low to this high, and now you're seeing, you know, we're building a picture, supposedly, yeah, we're building a you know, some confluence. And then you know, as traders trade also support and resistance, I'm a supply and demand trader, and we know that support and resistance is literally just supply and demand zones that have been projected into the future. You want to look at this level here, right, and you want to see some confluence at this level, right? And we can see that there is potentially some confluence, right? And you've also got let's go to, matter of fact, I'll draw support and resistance, how other traders draw support and resistance. So what you would have is probably they draw it as lines, right? And no, in matter of fact, I'll draw it as a zone, right? So we'll just highlight that zone there, because you have you know, resistance, 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 and then you've got kind of like a little break there. So this would be an area of what we would call resistance, potentially turning into support in the future, right? So you project that this level is going to be a level that is really going to you know, potentially hold, right? So everything's all good, right, so far. Now we know as supply and demand traders, right, that this area, a low to a high, is, and in between here is really just fair value, right? This swing low to this swing high is an area what we call fair value, and fair value is basically the 50% level between a low and a high, right? High being the expensive level, this low being the first cheap area. This is really just fair value. It's not the most optimum level of you know, a place to trade, right? And if you also check out my my video on trading the complex pullback, you'll also understand what I'm talking about as well, right? And we're trying to avoid what we would consider the complex pullback, right? So we know as supply and demand traders that we want to be buying at this area around here, right? But let's continue with Fibonacci, right, and support and resistance. So let's look back to the past and let's see, you know, whether that was a level, you know, had been used in the past for extra confluence. Yep, you can see it's kind of reacted around here, and it's reacted, you know, back in, what's that, 2012? Yeah, so a good 6 years ago, you know, around here. Don't know whether traders would have gone back that far, but they probably would have gone far enough to maybe 2014 and seen that it reacted right here. So you've got your confluence, and you've also got your confluence here, right? Now, when prices start to, you know, come down, right, what you have is, you know, prices haven't quite touched this, you know, this level here, right? So you're really waiting for prices to at least come in, and Fibonacci traders will wait for it to definitely touch at least one of these levels. It will come into this, you know, support, resistance now turns support, but they really want to see prices touch this Fibonacci level, right? And that's another problem with Fibonacci traders, is that they're very specific, right? You're very specific, and I used to be like this as well, because I used to trade, you know, Fibonacci when you're learning to trade, and you know, this is what you want to see. You want to see it bounce, ping, you know, whatever it is, right? You want to see the reaction, right? And what we're looking for is really just price and an average, right? Which I'm going to get into in a minute, right? But anyway, so Fibonacci traders are coming down here. And they want to see prices react off of here, right? So prices have come down slightly. I haven't seen buying is really coming here, right? But you haven't got Fibonacci traders in just yet, right? And you know, prices, you know, start going higher. You probably have traders looking at this price action on maybe a lower time frame and saying, you know what, it's come down low enough, and let me try and jump in a bit early. Maybe they've got some profit, maybe they haven't. And also as well, like I said, just to repeat that I'm not trying to disprove Fibonacci levels. You know, there's always going to be a level aligned with Fibonacci, and you're going to always find examples where Fibonacci works and where it doesn't, right? But let's continue, right? So we've come down into this level of this support area, and still haven't touched it yet. There might be some traders that will be looking to probably jump in there as well, right? So on and so forth. And then we get basically this bearish candle. There might have been traders jumping in somewhere around here on a lower time frame, right? And then prices pretty much come down, right, to this level here, to 78.6. Now 78.6 level, traders, again, Fibonacci traders don't necessarily trade them by themselves. They're looking for a level of you know, support and resistance, right? Now, is there any immediate support and resistance at this level here? No, right? There really isn't, nothing here. But let's just say, let's try and, you know, project back, right? Let's just put a line there and try to project back. Is there a level, or potentially bounces right off of there? But I don't think there's going to be too many traders that's going to look to, like I said, go back this far. And yeah, it pings off that level, but this is way back in like 2012 again. So I doubt this would have been a level that traders would have been looking to enter on, right? But some, never know, some traders may have looked to try to enter, but generally I'd probably say most traders wouldn't have taken this. The 78.6 isn't a popular Fibonacci level. The 618 is is really the level that traders want to trade, and then we start to go higher, right? So it looks like the 38.2% level didn't work. The 61.8% with the 38.2 confluence didn't work. The 78.6 with no confluence ended up, you know, working. And it gets, you know, quite confusing, right, as to which way you really, you know, or necessarily which way, but, you know, what level you really want to trade, right? Now, let's contrast that with value range trading, right? Now, let's go back a bit. Let's go back. Right, so again, we go back to this, right? Now, we know as supply and demand traders, which I show you every week, that higher highs, right, higher lows and higher highs, highs, lows, and lower highs are really the best areas of supply and demand, right? So I know, for example, that I can clearly see that this is level of demand, right? We've made a higher high. So this is my demand zone, right? This is another one of my demand zones. Now, I know that this is the best area to buy. This is the first area of value, potential value, right? And again, we go through this. If we go through this, right, we're going to see prices obviously retrace. But what I also want to get to is looking at the what I call the value range tool. Right now, value range tool is basically a Fibonacci tool, but I've deleted all of the Fibonacci ranges and just looked at what the 50% level, which is fair value, right? And all I'm concerned about is whether we are above fair value, right? The higher we are above fair value, the more you're buying at retail prices, and at fair value, and below fair value, right? Below fair value is what we call wholesale prices. This is bargain prices. This is cheap, right? This is providing that I want to buy the euro and not the US dollar, right? And we also have a value range from here and here, right? Now, we don't know as traders where prices are likely to range from, right? Because we've had this, this quite bullish move up, right? And what we expect is for prices to potentially range at some point, right? And even if we're taking advantage of the trend, right, we still want to take advantage at probably the best level, which is going to be down here. Now, I'm always expecting prices to range at some point, right? I'm always expecting something like this to happen, right? Or at least price to really kind of pull back, right, into a level of demand. That's just what I expect. I'm not in a rush to jump in on the trade. I'm trying to buy. I'm always buying with the perspective of value, right? So for me, I'm looking to trade into this demand zone because this is the best area, right? Now, we can obviously see now, right, without the confusion of Fibonacci and all these lines on the chart, you can see how simple this looks, right? We're just looking for this area right here, which also is in alignment with this fair value level from this low to this high, right? Because we don't know whether prices may range from this range or may range, from the wider range, right? We might do something like this and may pull back, right? We have no idea, right? So you can obviously see that when prices came back down to this level, right, which is the best area, really to try and look for a buy trade, right? We can see that prices, first of all, within this value range from this low to this high, we were below fair value, so we were buying definitely at a bargain. And also between this low and this high, we were buying at fair value. And this not necessarily, don't look at this as trying to buy off the bounce of this 50% level. It has nothing to do with that. You're just trying to be aware of where you are in potentially the bigger picture, right? So anywhere around here, buying at fair value is really the first area you really want to start looking at, if you know what I mean. Buying anything above fair value, unless you believe that prices are still undervalued around here and prices are going to shoot further up, right, around way up here somewhere, is where you may want to start taking buy trades around here. But generally what you want to look for is fair value, and you have to kind of look at value trading in Forex and any really discipline as what the first and foremost in your mind, right? Buy low, sell high is how you make money. It's not buying at retail, it's buying at either fair value or below fair value at wholesale, right? So you've also got a complex pullback, by the way. You can see this move. If you look at how we do it, like kind of that A, A, B, if you want to look at that as C, right? Prices pull back into a level, and then prices look like they're going higher. Prices, traders would look to buy here, right? And then it fails on them. They think that probably, you know, now this is a level of, you know, resistance right here, because you've had support, resistance, and traders looking to probably get short if they see some price action. Whether they do, maybe on the lower time frame, they might not. They would have probably here, because this would have been very bearish at some point. Traders would have been jumping in short, and then they basically been caught out again, right? Again, just watch the video on the complex pullback and how to trade it with supply and demand, right? But anyway, you can see that you're really just trying to buy at value, right? You're buying in areas of, you know, demand or supply, right? And areas really of value. Fibonacci traders and traders who trade support and resistance really just looking at technical patterns, right? They're not really understanding the psychology behind why moves, you know, move higher, right? They're not understanding that this is the area that you really should be buying in. You know, as soon as, you know, prices will go past, let's, you know, switch this to a Fibonacci level, Fibonacci retracement. When prices necessarily go past the 618 you know, retracement level, then you would, you know, on a micro level, let's say for example, a lower time frame, traders might look at this as a, you know, a downtrend, right? So traders would probably be looking at this high to this low and start saying, oh, we're in a downtrend now, right? And start, you know, trying to sell here and sell here, look to try and get short. No, this is where the optimum level where you really want to look to buy, right? And again, if prices, right, let's say for example, prices end up, you know, going higher from here, right? So if we get, so, and let's say for example, this worked out, right? And let's say for example, prices did go higher, right? Fair enough. You know, it does what, you know, prices do what it does. But at some point, there will be a level, you know, prices will pull back to a demand zone, and that's always going to be the best place to buy, right? So let's continue a bit further and let's keep going, right? So let's look at, you know, levels of Fibonacci and, you know, value ranges. And you know, I also want to say that you really should be understanding fundamental analysis as well, because fundamental analysis is really what keeps you in the direction. The reason why technical analysis tends to fail a lot with a lot of traders is that they don't know which way to trade and what side they really should be on, right? So right, so we come down here. Right, this is a decent level, and this is something that I spoke about, I think, earlier last week, right? So let's look at this level, right? So you've got, you know, first of all, you've got resistance, and then you've got, let me just go back a bit, let me go back one, right? And then you've got this level of, I suppose, a pin bar here. And when you think about the overall picture and where you're buying at, right? If I've got, let me turn this into a Fibonacci retracement. Let me get rid of this. Right, so we're at a 78.6, right, or just below it, right? Now, another thing that traders would do is search, right? They will search for potential alignments. Right, actually it'd be up here, as this would be the high to this low. Now we can easily see that we've got a level of, you know, support or potential level of support, previous resistance, and now we've got the 618 and we've bounced off it. Right, now we know as supply and demand traders that really and truly here was the best level, right, to necessarily buy. And that's not to say that prices won't go higher, because there's always going to be a level, right? There's always going to be a Fibonacci level that aligns with a level of support and resistance, or supply and demand, right? It's just always going to happen. So it's very difficult, you know, to, like I said, understand which levels are really the best levels, right, in order for you to be trading off of, right? And if you're trading like everybody else, you really haven't got an edge. This is such an obvious trade, right? Such an obvious trade. And obvious trades, again, do work, but if you want to have an edge in the market, right, you cannot trade obvious trades, right? Or if you're going to trade obvious trades, at least reduce your risk size and understand, you know, the reasons why maybe this pin bar is going to work out, right? And again, I made a video on, is a pin bar a reversal signal, or is it a sign of a reversal, right? And I give you a tip as to really increase your chances of trading pin bar candles and really any reversal candlestick formation, right? Which a lot of technical traders don't take into account when it comes to looking beyond the price chart, right? So from a value range perspective, right, let's tidy this up a little bit. Right, let's turn this into, in fact, let's turn this into a value range, and this into value range, right? Or was it this one? This one here. So first of all, now your charts are cleaner, right? Your charts are a lot cleaner, not so much lines about. Let's turn this into a level of demand, because it is a level of demand, and this would be a level of demand too, right? And like I said, from every level of demand, right, is where we want to put a value range tool, from the low to the high, because we don't know whether prices are going to range from here, or range from here, right? We're just looking for the optimum areas that we want to try to buy from. And again, this doesn't take into account fundamentals, sentiment, you know, what's happening at the time, etc., right? So we're just looking at it purely from a technical analysis point of view, right? I'm not saying that you should have been buying here or whatever, right, or any of these zones. But if you were looking to buy the euro, then this would have been the area, the first area to be looking to trade, right? And simply because we know that this was a past area of demand, this is a past area of value. From this low to this high, right, we could see prices range between here and here, right? Prices could do something like this. And if it doesn't, then the next area that prices could range from is going to be from here. But anyway, let's delete that. So again, waiting for potential price action to occur. There was a bit of price action, right? Did react a little bit, and then we broke to the low side. Then what we would do is delete that, and understand the bigger picture. We're always buying or trying to buy below fair value. We've got fair value here, and we're trying to buy below fair value, all right? If we believe that, you know, prices are of value around here. That's not to say that we should always buy around here. I'm just doing a demand example, right? And we do get a reaction here of around, I actually entered this trade, I've got about 130 pips out of this. And then prices ended up going lower, and now we could potentially range from here, right? And here we currently stand, right? But again, just going back over the differences really between Fibonacci trading, your typical Fibonacci trading, and what, you know, traders will trade, and value range trading. It's all about just understanding where you are in the bigger picture, right? And potential value range zones. Are you buying below fair value, or at least at fair value, right? Fibonacci and support and resistance traders don't take that into account, right? They just think that Fibonacci is a magic number and it should bounce off of the 618. The reason why it bounces off the 618, so much is because you're buying automatically at fair value. If it bounces off the 76.8, it's because simply you're buying at fair value and you're usually within some sort of demand zone if you're taking a low to a high, right? So keep it simple, right? Keep it trading, it doesn't have to get complicated, it doesn't have to get complex. You don't have to put all these Fibonacci ratios and extensions and retracements on your chart, right? All you really need is to understand value, supply and demand, where the best areas to look to trade are, right? Have good risk reward, have good psychology, and really understand value and fundamentals, right? There's no strategy in the world that's going to give you 100% win rate. It's all about probabilities and managing your risk, the law of large numbers and random distribution. So yeah, hope you enjoyed this. If you want to get a bit more as far as understand how I really trade and really go over supply and demand and really a unique perspective, and my perspective, which you won't see anywhere online, right? There's a link in the description box below regarding these supply and demand trading course, which also includes a fundamental analysis course and a way of trading where you manage your risk and you don't trade with stop losses, right? Sounds like I'm hedging. It's nothing to do with hedging. You're not opening two accounts, and things like that. It's a brilliant way to manage your risk, and it's based really on time as well, right? So you're never gonna prematurely get stopped out early and watch your prices go in your direction. So check it out. The link is in the description box below. There's so much content in there, it's brilliant value, really good value, and hope you enjoyed this. If you have any comments, any discussions or anything like that, just comment in the description box below. Let me know your thoughts, and I will get back to you ASAP. Don't forget to like and subscribe, and take care.